Welcome back to the Deep Dive. Today we're digging into UiPath's Q2 fiscal 2026 earnings. We've gone through the call, the numbers, the analysis.
Yeah, and our goal, as always, is to pull out what really matters for you.
Exactly. Give you the clear picture.
And it was quite the quarter, wasn't it? Definitely got the market's attention, some pretty notable beats, and they raised the outlook too.
Right, you saw that immediate pop in the stock price.
You did. So we need to unpack, what's behind that positive feeling and what it signals for UiPath's bigger picture, their long-term strategy and automation.
Couldn't agree more. So we'll hit the headline numbers first, quick overview, then we'll get into the meat of it, this whole agentic AI thing they keep talking about.
Yeah, what it actually is.
And if customers are actually buying it, plus those go-to-market changes. Sound good?
Let's do it.
Okay, headlines. UiPath delivered. Strong beat. Non-GAAP EPS came in at $0.15.
Which was way above the, $0.08 consensus?
Handily beat it, yeah. And revenue landed between, let's call it $361.7 and $362 million. That's up 14% year over year.
Also beating the consensus, right? Around $348 million.
Beat it by about 4%.
Yeah.
So, I mean, it really shows they're not just meeting expectations, they're comfortably ahead, even with the, cautious macro talk.
Absolutely. And that wasn't just like a one-off thing. Look at the recurring revenue. ARR, annual recurring revenue, that key SaaS metric, climbed to $1.723 billion. That's up 11% year over year. And they added $31 million in net new ARR in the quarter. Healthy.
Okay, decent growth. And profitability.
That was impressive too. Non-GAAP operating income hit $62 million. That's a 17% margin.
Wow, okay.
Yeah, and that margin is up 1,500 basis points compared to last year. Big jump in efficiency shows they're getting better at managing costs while they grow.
That is a huge improvement, growing smarter, not just bigger. What about cash?
Solid. $42 million from operations, $45 million in adjusted free cash flow. And they're sitting on over $1.5 billion in cash and investments. Very comfortable position.
Yeah, plenty of cushion. And subscriptions.
That jumped too. Subscription revenue up 22% year over year, $238.4 million. So you look at all this.
Yeah, the picture is pretty clear. They're executing.
Exactly. And you could hear the confidence in management's tone on the call. Feels like they think things are really starting to click.
Okay, so let's unpack why they might feel that way. Beyond the numbers, the big story seems to be this strategic push. The line was automation and agentic AI being stronger together.
That's the key phrase.
What's the real shift here? Is this like a fundamental change for them?
It's a great question. And yeah, it's central to their future. What's interesting is how CEO Daniel Dines framed it. They're not ditching their core, right?
Their bread and butter RPA.
Exactly. That deterministic enterprise-grade RPA, the API automation, the software robots following rules, that's still the foundation. But now they're layering sophisticated AI on top. Things like intelligent document processing, IDP.
Which is like teaching software to read complex documents.
Sort of, yeah. Advanced reading comprehension for software. And crucially, these new agentic AI offerings.
Okay, agentic AI. Break that down. It sounds different from just automating simple tasks.
It really is. It's a big leap. Traditional automation like RPA follows very strict pre-programmed rules. If X, then Y.
Right.
Agentic AI, well, it can sort of think and act more autonomously. Picture software agents that can reason, plan complex tasks, execute them, and even learn or adapt as they go.
Wow, like a digital employee almost?
Kind of, yeah, but operating at a massive scale, it opens the door to automating much more complex dynamic processes that RPA alone couldn't really handle. So it's not just adding AI features, it's potentially, reshaping what enterprise automation means.
So it's not just having these smart agents, but making them work together with the old robots and the humans. That's the orchestration part, like a conductor.
Precisely. You nailed it. That's where their UiPath Maestro platform is critical. Think of it as the command center.
Got it.
It brings together these new agents, the traditional bots, human inputs across all sorts of different systems, and makes sure everything's coordinated, governed, transparent.
And the goal is delivering actual ROI. Right? Not just cool tech.
Absolutely. It's about making critical processes faster, smarter, more adaptable. That's the commercial pitch.
Okay, so how are they making this real? Product-wise, it sounds like they made some big moves this quarter, stuff going GA, public previews. What stood out?
Yeah, they delivered. Big one was coded agents hitting general availability. This lets developers build and deploy custom Python-based agents, but with human oversight built in. More power, more flexibility.
Okay, for the more technical teams.
Right. Then intelligent document processing, IXP, they're calling this enhanced version, also hit GA. Think about processing invoices, contracts. This aims to pull out the key data with near human level accuracy. Huge time saver, fewer errors.
That makes sense. We hear a lot about that bottleneck.
Definitely. And maybe the most strategic piece, they introduced Data Fabric in public preview. This is meant to be a unified data layer.
Zero copy, I saw that phrase.
Yeah, zero copy. Basically a secure, simple way for all these automations and agents to get the trusted data they need without creating tons of copies or wrestling with complex integrations should speed things up significantly.
Okay, easier data access. Plus, I saw they launched API workflows, making it simpler to manage how automations connect to business systems securely.
Better API management.
And they're embracing open source more, like with Llama Index support, and trying to get customers using it faster with those forward deployed engineers and the playground sandbox.
Yeah, that playground idea is smart. Let people kick the tires easily.
Right. Reduces the friction.
And all these product moves, they're supported by a revamped go-to-market strategy, the GTM. They spent the last year really rebuilding it.
How so?
Stabilizing the structure, adding more sales capacity, bringing in specialists, really focusing on value-based selling, talking outcomes, not just features, and tightening up how they inspect the sales pipeline.
So better forecasting, bigger deals, hopefully.
That's the idea. Higher quality pipeline, moving towards those larger multi-product deals where this whole platform vision makes sense.
And partnerships seem huge for this strategy, too.
Crucial for scale. They deepened the Deloitte relationship. Deloitte actually launched an Agentic Global Business Services, offering specifically for SAP S/4HANA migrations using UiPath.
Interesting. SAP migrations are a big deal.
Huge. New deal with HCLTech too, aiming to accelerate agentic automation adoption. And maybe most importantly, Microsoft reaffirmed UiPath as their preferred enterprise agentic automation platform.
That's a big endorsement.
Massive. They're strengthening integrations like the autopilot plugin for Copilot, a connector for Copilot Studio. It really embeds UiPath deeper into that Microsoft ecosystem.
And they brought in a new CMO, Michael Atalla, to lead the marketing push. Plus, staying a leader in Gartner's RPA Magic Quadrant for the 7th year.
Consistency matters. It shows they're still seen as a top player, even as the market shifts.
Okay, so great tech, strong partnerships.
Yes.
But are customers actually using this new agentic stuff? Is it moving beyond pilots? What's the validation?
That's the key question, right? And the examples they gave suggest, yes, it's starting to drive bigger deals and deeper use cases. Voya Financial, for instance, is expanding agentic capabilities for over 40 different accidental claims scenarios.
40? Wow.
Yeah, all orchestrated by Maestro. And think about this. An international mobility services company bought agentic tools aiming to deploy AI agents in over 2,000 branches to handle complaints.
2,000 branches. That's massive scale.
Huge potential impact. And they mentioned a big competitive win, a 7-figure deal with a Fortune 15 tech giant.
For SAP transformation.
Exactly. SAP transformation, employee operations, covering supply chain, manufacturing. And the key was they chose UiPath because of the broad platform, including testing, process mining, and the agentic automation piece. It wasn't just one thing.
That's a strong proof point for the platform strategy.
Definitely. Other examples. A big U.S. healthcare provider piloting agentic tools in accounts payable, aiming to cut manual work by 60%, processing time by 75%.
Those are serious numbers.
Right. And Cardo Networks using coded agents for IT ticket classification, piloting a master agent they think could resolve maybe 30% of IT tickets automatically. These aren't just theoretical benefits. They're seeing quantifiable results, driving bigger deals, real transformation.
And the overall customer metrics seem to back that up. The $100K plus customers, $1 plus customers.
Yep, both those cohorts grew. Customers spending over $100K annually are up to 2,432. Those spending over $1 million hit 320. Shows adoption and expansion.
And retention looks good.
Very solid. Dollar-based gross retention at 98%, hardly anyone's leaving. And dollar-based net retention, DBNRR, held steady at 108%. So existing customers are, on average, spending 8% more year over year.
Okay, so keeping customers and growing them. And cloud adoption.
That's accelerating. Cloud ARR is now over $1.08 billion, up 25% year over year. Clear trend there. Customers moving to the cloud to take advantage of these newer AI and agentic features.
Makes sense. So all this positive momentum, good execution, led to raising guidance.
It did. They boosted the outlook for both Q3 and the full fiscal year 2026. Signals management's pretty confident they can keep this going.
Okay, what are the new numbers? for Q3.
Q3 revenue expected between $390 and $395 million. ARR landing somewhere between $1.771 and $1.776 billion, and non-GAAP operating income around $70 million.
In the full year, that got a significant bump, right?
It did. Full year revenue now projected between $1.571 and $1.576 billion. ARR between $1.834 and $1.839 billion. And they're expecting about $340 million in non-GAAP operating income and $370 million in adjusted free cash flow. Pretty robust.
Very strong numbers. But there's a caveat, isn't there, about the agentic contribution?
Yeah, that's important context. The guidance is strong, and it includes some buffer for macro uncertainty and a bit of an FX tailwind. But they were clear. Don't expect a material revenue boost from the new agentic solutions in this fiscal year, FY26.
So it's more of a next year story, FY27 and beyond?
Exactly. They see it contributing much more significantly then. So the positive traction is great, builds confidence, but the big financial impact is still down the road. It's a foundational year for Agentic.
Got it. So what's the takeaway for investors, for the market? Stock pop, but what's the bigger sentiment?
Well, the pop was nice, over 5% after hours, good volume. But if you look at how the stocks performed relative to other software names recently...
To the lagging a bit.
Yeah, it suggests the market is still kind of in show-me mode. They want to see sustained ARR acceleration, consistent execution over several quarters. This Q2 is a really good step, but they need to keep delivering to fully win back sentiment, especially proving that the agentic bet pays off in growth.
And that variable macroeconomic environment tag is still hanging around.
It is. Consistent theme, right? Month-to-month swings, worries about tariffs, rates, geopolitics. But they did call out some bright spots. U.S. finance and healthcare seem okay, some European manufacturing too.
And the U.S. public sector. That was a drag before.
Signs of life there, stabilizing, returning to more normal buying. They expect it to contribute more in the second half, so the guidance includes that caution, but there are definitely areas of momentum.
Okay, so the big picture, the long-term story. UiPath trying to evolve from just RPA to being this essential orchestration layer for everything, agents, bots, humans across the whole enterprise.
That's the narrative, a multi-year journey, potential for a real platform flywheel effect if they pull it off.
All right, let's pivot. Time for our This Is Not Financial Advice segment, that outrageous but maybe plausible trade idea. What you got for UiPath?
Okay, disclaimer first. Purely hypothetical, entertainment only, do your own homework, not actual advice.
Understood. Hit us with the idea.
So, you look at UiPath. Strong enterprise base, great retention, ambitious strategy to own this agentic orchestration space. But the market's still hesitant on near-term growth, and the company itself says agentic revenue isn't material yet.
Right, the tension is there.
Exactly. So here's the triple threat orchestration play. 3 parts.
Okay.
Part 1, go long, but use long-dated, way out-of-the-money call options. Leap PACE. This is the conviction bet. Betting that over the next few years, they do become that dominant orchestration layer, and the ARR and cash flow growth explodes beyond FY26. It's outrageous because you're betting on the distant future, ignoring the current noise.
Looking over the valley. Okay, part 2.
Part 2, hedge the near term. Sell shorter-term covered calls, maybe expiring around their Fusion user conference coming up. Generate some income, acknowledge the market's wait and see on agentic proof points, which might come at Fusion.
Makes sense. Income generation, slight hedge. Part 3.
Part 3, amplify the thesis with a paired trade. Take a small short position in a more traditional pure-play RPA competitor, someone who seems slower or less committed to pivoting hard into agentic AI and orchestration.
The bet being?
The bet being that companies not embracing this integrated agentic future will lose ground to a platform like UiPath, which is showing the product roadmap and the partnerships to lead this new wave. It's a play on industry transformation.
A very bold triple threat indeed. Lots of conviction needed there.
Definitely plays the long game.
Okay, wrapping up then. UiPath Q2. Strong results, beat expectations, raised guidance. Driven by solid execution and real progress on their agentic AI platform and GTM improvements.
Yeah, they're clearly planting their flag as the leader in this emerging agentic automation orchestration space. Got the customer wins, the big partnerships backing that vision, even if the major revenue impact from agentic is still, a year or 2 out.
Absolutely. So the closing thought for you, our listener. Think about your own world, your industry. What complex processes, maybe ones you deal with every day, could be completely run by AI agents a year from now? And how does that change things?
Definitely something to ponder. And just one last time, remember, this is all informational, not financial advice.
Thanks for tuning in to The Deep Dive. We'll catch you next time for another look inside the numbers.